updates on that. But let's move on and get you more from the economic survey that was tabled. As is tradition, the economic survey for the financial year 2023-24 was tabled a day before the union budget will be presented in the parliament. The 476-page economic survey underscores that India's economy has solidified its post-COVID recovery and is continuing to expand despite global volatility. The survey also indicates that the headline inflation rate is under control, though some specific food items remain elevated. The trade deficit in financial year 24 was lower as compared to financial year of 23, with the current account deficit around 0.7% of the GDP. Foreign exchange reserves remain ample as well. However, the economic survey has adopted a more cautious stance on India's growth prospects, projecting an expansion of 6.5 to 7% for the fiscal year. The forecast, remember, is lower than the 8.2% growth achieved in the previous year and falls short of the 6.8 to 7.2% range estimated by private economists and the 7.2% forecast by the Reserve Bank of India. In an interesting observation, though, the centre has pointed out that the profit sector is not doing enough. In fact, private sector is not doing enough to create jobs despite the quadrupling of its profits. In the economic survey, the government has stressed that job creation happens mainly in the private sector and said it is in the interest of the companies to step up hiring and worker compensation.
The official word which has been used by the chief economic advisor in his press conference a few minutes ago was prudent. And addressing that aspect, yes, the government is being a bit cautious. It's forecasting a 6.5 to 7% growth rate for the next fiscal year. That's significantly lower than this year's growth of 8.2%, which has been the real GDP growth in the economic survey, and also lower than what the RBI itself had predicted for this year, which will be 7.2%. The government is saying that it wants to be a bit prudent about it in the light of global economic slowdowns in the aftermath of what's happening in the Middle East and in Europe. So the government says it's a bit cautious, which is why it has forecasted a relatively conservative forecast, as you said, of 6.5%. The other key headline, as you pointed out, from the economic survey is the fact that the government has addressed the fact that there is a job crunch, but it has put the blame on it squarely on the private sector. In a very damning excerpt from the economic survey, the government says that the profits of the private sector, the non-financial private sector,